Hello viewers, welcome to my channel, Sensor 360 Investor. In today's video, we're going to take a look at an update to various portfolios. Focus here is in the wealth segment within our 360-degree framework. And before we begin, the chance of providing financial advice, please pause, read, and continue. Thank you. Okay, so without much further ado, let's begin the show. So we're going to take a look at something I call Traderboard, which is a meta portfolio. So it's a portfolio of portfolios that I'll run. And so everything is compared back to the benchmark, which is the S&P 500. So as of today's close, and we're at 17.26%. So that's the benchmark we're going to perform, compare these portfolios against. Okay, so there was an update to the dogs of the Dow over the weekend. And as of this evening, the dogs of the Dow is returning 3.21%, which is a long way south of the S&P, albeit it is positive. Next up is the 60-40 portfolio. So this one is doing a little bit better. It's at 9.54, but usually this will come in around long-term averages, and because there's a bond portfolio component to it, and given what bonds are doing, it's a little lighter this year so far. Underperforming, but positive. Next up is an asset allocation. This one uses mutual funds, and typically in a 401k, you're only allowed to use funds, and so that's the restriction here. Then based on the what's available, that further restricts your choices. But using an asset allocation model to invest in the 401k. So this is year to date is at 5.94%. And then for funds that have been rolled out of a 401k, that's in a IRA rollover, you have a little bit more choice with what you can invest in here. So this one uses a similar technique, but replaces funds with ETFs. And the return so far on this is 5.08. And then we move on to the more stock concentrated portfolios. So the first one is the Lynch style growth portfolio, looking at kind of growth companies that you're familiar with. And so far, this one is at 19.99%. So this is the first portfolio that's outperforming the benchmark by a little bit. And then next up, we have mega cap portfolio, and I did do a video on this, so there's a video out in the video library you can take a look at. And this one yesterday is up 91.05%, so completely outperforming everything else and the benchmark. And then if we take an average, because each one of these would be split on an equal dollar basis, so we can just do a straight mean average. Then across all of these portfolios, the return would be 22.47%, which is ahead of the benchmark, and it's outperformance of about 30%. So far, year to date, the portfolios is outperforming the S&P by a pretty healthy margin. Okay, so that's it for this video. I hope you like this update on what investments would kind of look like. And if you're not a subscriber, please do subscribe, like, share with your family, friends. And that wraps it up for today. I will see you in the next video. Thanks for watching. Thanks for listening. Goodbye.